So, how did I make $1,588 with 2 cents trading Merck call options? I won't say the time really. I mostly day traded this with using a new strategy. And so basically, on November 14th, I bought 6 call options. So, November 14th, which is this day, 11/14, I bought call options on Merck, and then on 11/15, which is this candle right here that says 11/15, I bought another pair of call options because the position was down. I want to say it was down 10 or 12%. And so when I bought call options on the 15th, it brought my average down. Instead of being down 10%, it was now down instead of being down 12%, I was down 8% now. And then on the 18th, I bought 4 call options in total, which is on the 18th. So yeah, on not the next day, but on Monday, November 18th, I bought more Merck call options because my position was still down. It was still down 8%, and so just to keep it to keep my average at being down 5%, I bought 4 more call options, and it brought my average down to, I want to say it was down 6 or 5% down now instead. So instead of being down 8%, now I was down 5% or 6%. And then basically I just sold out on the 20th, which is today, and I made I made an easy gain of $1,588 just trading Merck call options. And to be honest, I feel like the reason I sold out too was because looking at the rejection that Merck got rejected by today was the 9-day moving average. It tried breaking the 9-day moving average today, but it got rejected by it. And so since it couldn't break that 9-day moving average, I kind of took that into consideration too as well. So I was like, well, if I'm already up if I'm already up 13%, it's way past my price target of 10%. It's way past my percentage target of 5 or 10%, right? I'm honestly just gonna sell for what it is right now, right? And because I also feel like, if Merck decides to not break the 9-day moving average today, right? I won't regret, selling out the position, knowing that, I could have sold out the position, but me being greedy, I didn't, And so that's why I sold out the position also as well, because besides being up past my percentage targets of 5 to 10%, I was, also looking into consideration that, there's also a chance that Merck could get rejected by the 9-day moving average, so I might as well play it safe. And it's already, and plus my percentage target is way past 5 or 10%. And so that's why I sold out of Merck as well. But did I pick anything else? So right now the next stock that I'm personally gonna trade now is Microsoft. The reason I chose Microsoft was because out of the Magnificent Seven, I chose Microsoft. And the reason I chose Microsoft is because right now it's at this sort of support level around 410, you could say. And so I personally feel like one of these days Microsoft is just gonna have one of those I guess you could say explosive days, I guess what I'm trying to say really is that I guess the market kind of rotates in a way, and I've just discovered that. I'm not sure if that's a thing or not, but I kind of discovered it in a way, sort of. And basically, I guess you could say consumer goods, or like consumer goods slash like medicine stocks, right? Like Merck, Johnson and Johnson, and Pepsi, Coca-Cola, right? Those type of stocks, right? I feel like those are the type of stocks that are kind of doing good in this like sort of rotation right now. And then like I guess you could say like the tech company stocks like Microsoft, Apple, Tesla, Google, and etc., right, are kind of the ones that are doing, like bad right now in a way, but not really. But I guess you could say there's like a sort of rotation going on right now. And so basically, I guess you kind of want to play the rotation game as well. So you kind of want to have like a watch list of stocks that are, in this industry or that industry and stuff like that, right? That way you can know and be like, okay, that's probably the next sector or industry that I want to target. That way I can make money from it, right? And so I personally feel like also, most of these stocks, that sort of rotate in a way are the ones pretty much that everyone knows. So basically, I guess you would say like Apple, Google, Walmart, Target, Costco, and etc., right? And like, I feel like those companies, right? Those are profitable companies, right? And so eventually, if they ever have like a terrible day or week or month, right? Eventually they will go up in a way. The reason is because one, they're a well-known company, and number two is because they're a profitable company. And so if you analyze that particular, well-known company like, Apple, right? They have a good track record of being profitable, each year, I guess there hasn't been a year that they have not been profitable. But let me check just to be sure. And if you want to tell how a company is profitable, just look at their EPS, earnings per share, annual earnings per share, right? And so far there hasn't been a single year. Yeah, there hasn't been a single year that Apple has not been profitable. They've been profitable for a long time, I guess you would say. And so that's pretty much it. That is how I made $1,588.02 trading Merck call options. Basically, I guess you could say what needs to happen is that when you're in a trade, you need to have a game plan. And so basically my game plan is like, okay, I kind of want to take into consideration like support and resistance levels, and I kind of also want to take into consideration like moving averages, and I guess you would say the news, sort of, but not really. And yeah, just keep an eye on those like sort of things, really. And if you guys want to find stocks, right, that you want to trade, go to finviz.com, and then you can create your own watch list, and then you can trade using finviz.com. That's pretty much it. I'll see you guys in the next video. As always, take care and bye.